We are the CIA, where we look at the facts and the data behind crypto projects to help you cut through the hopium and make better decisions on the projects that you want to invest in. Today, we're going to look at market cap, but first, check out the shirt. I'm wearing a pink shirt because I just got back from a derby party, and I'm not a huge derby guy, but you got to see the finish from this year. Like, it was three horses, and we couldn't tell who the finisher was until, without the photo finish. It was incredible. They couldn't even announce it in slow-mo. So if you like sports and that kind of thing, go check it out. It was pretty cool. But let's get back to the topic at hand. And we're talking about market cap because I saw a comment, and if this is you, I'm not picking on you, but it's really important. If you have the question, if you're confused, other people are all definitely confused. So when we're looking at market prices between a project, from it could be a year ago, 2 years ago, even a month ago, we have to be careful to be comparing market caps if we want to compare apples to apples. And let me show you real quick on this screen here. Pangolin's a great example. So if we scroll out to, this is the max chart. Let's go to the max chart on price. You see price in the last bull cycle. Let's use this peak. Was I think it's 425, $4.25 is what it peaked out at. So on this peak, $4.25. So that was the peak last cycle. And this stuff over here on the left, that's when the token was launched. So we're gonna ignore that. But let's look at the price today. It's $5, 53 cents. So now let's look at the market cap. You'd expect the market cap to be, less than so it'd be like an eighth or less of what the market cap was when it was 425. Let's go to the max chart. The whole lifespan. But look at it. It's only, the peak was just under 200 million, and now we're just above 100 million. That's like a half. That's not even close. So what happened here? Like, why is it not doing what we'd expect? Well, it's because inflation. So the reason we can't make that assumption is because tokens get inflated, and tokens can also be deflated, right? We can't assume that it has the same circulating supply. So let me show you what that looks like from the math point of view. We'll run through the example so you can really see what it is, and it'll make more sense to you. So let's hop over to the whiteboard. So you can see here on the whiteboard, market cap right here is just price times circulating supply. Now, there's two types of supplies. There's the total supply of the token, and then there's this supply that's circulating that investors can purchase and you can trade. And market cap is basically, if you don't know, just the total value that investors have bought in the project. So if we want to get price of a token, we say price is just equal to market cap divided by circulating supply. It's pretty simple if you've taken an algebra class, right? So you don't need algebra to understand it. But one important thing to note is circulating supply is what is used by the coin geckos and the coin market caps of the world to calculate price. So if any tokens are added into the circulating supply through inflation or emissions, then that'll change what the price is if the market cap is the same. So let's do an example to kind of help illustrate this. Let's bounce over to the pangolin. So we know that pangolin was inflationary, especially when it first launched. It's less inflationary today. But to show that to you, let's do an example here. And what we're going to do is we're going to look at circulating supply, right? CS. We know what it is today because it's listed on coin market cap. So circulating supply is 217 million, and let's just say 570,000. So 217 million and 570,000 tokens. Now, CS at the last bull peak, we're going to calculate that. And to do that, we've got to go in here and grab the total market cap because we know the price, we talked about it. It was 425. And it's market cap divided by price, which equals 425. Now let's get the market cap. And we'll zoom in here. So the market cap at this peak was 186 million tokens. And you whip out the calculator. Yeah, 186 million divided by 425. So the circulating supply was 43,764,000. And let's just say 700 tokens. So the circulating supply has increased significantly since that last price. And the reason that's important is because if you're just comparing prices, you would say like, oh, Pangolin has tons of room to run to be where it got last cycle. That's not true, unfortunately. So it actually is about what, 3/4 of the way to where it was last cycle already. And the price is just a lot lower because there's more tokens. But for Pangolin, for example, like it's not that inflationary anymore. They're only releasing 1,000 PNG per month, so we're not going to see a big change in dilution like we did the last time. And one more thing that you can look at, and I'll point this out so you can maybe kind of spot this type of thing. Look at how price here is decreasing last cycle, right? Because price is decreasing, what we would expect is market cap to also be decreasing. But when we go over to market cap increased during that time, right? Until we started getting some, really hard sell off. But like this increase in market cap over here is a sign that the token is inflationary because prices are decreasing while market cap is increasing. And that's a trend you can see. It's the opposite too, right? Like if price is increasing and market cap's decreasing, then it would be super deflationary. You usually don't see that. Usually what you see is tokens getting inflated out. That's much more common. So anyway, hopefully that is helpful. I appreciate you guys watching. And if you have any questions, if it wasn't clear, like throw a comment down below, because if you have a question, somebody else does, and I'll be happy to clarify for you. So thanks for watching.